Well, the interesting thing is we've just experienced one of the biggest moves in interest rates in modern history. In Australia, we've seen the move from 10 basis points to around about 4.35% on the RBA cash rate. The moves offshore have been bigger and even quicker. Interestingly, in Australia, the transmission mechanism for increases in interest rates impacting our economy, where mortgage holders make up about a third of the population, is quick, much quicker and much more effective than what you see in the US. And the reason for this is that in the US, you can fix mortgages for up to 30 years. But in Australia, really the maximum time frame that you're allowed to or can fix a mortgage is about 5 years, with most of us, most Australians, fixing it around about 3 years. Interestingly, we just saw a statistic last week coming out from the Australian Bureau of Statistics, which stated that 98.6 of all new home loans are now being done on a floating rate, which tells you pretty much in a nutshell what the expectations are amongst everyday Australians for interest rates. And that is that they don't expect them to be going up much more from here. In fact, they probably would expect them to be going down. On a rough approximation for most mortgage holders, though, if you were holding a floating rate mortgage 2 years ago and paying 2%, today the interest rate there is over 6%, which means that your payments are roughly around about 3 times higher than they were going back a couple of years ago. This puts or has put a significant amount of pressure on the consumer in the Australian market, although it's important to note that roughly another third of the population in Australia actually owns their home outright, with the last third, just for the record, being renters. So the increase in interest rates for the owners, the outright owners of household of homes, is that it's a benefit to them. Retail sales in Australia have been under pressure since January 22. And once you actually remove the impact of inflation on retail sales numbers, they've been negative for most of the time since then. In the most recent months, in the last month, retail sales came in at 0.1%, which was really a slight improvement on the negative 0.4 from the previous month. As you can see, the consumer is under a lot of pressure, and discretionary spending is the first place that this is felt. Everyday essentials are normally a little bit more cushioned, and they're still seeing small growth, but that's actually probably as a result of some of the price increases that you've seen coming through the system.